Many people in Moncton and Dieppe hear headlines about millions in federal funding for housing, but still feel unsure about what this actually means for them. And trust me, there's a lot of internet chatter right now about how expensive Greater Moncton has become in the last few years, specifically with rental rates and home ownership. The reality, this money could dramatically alter our housing market dynamics, impacting everyone from first-time home buyers and landlords to seasoned investors and retirees. But today, I'm going to unpack exactly how this federal investment impacts you and your real estate decisions moving forward. Cameron Brioux here. I'm a realtor here in New Brunswick. I make videos every week to help you buy, sell, invest, and navigate the Canadian real estate market. Right now, the Canadian real estate market is making headlines, from Toronto's condo oversupply to Vancouver's affordability crisis. But what about us here in Atlantic Canada? Specifically, right here in New Brunswick? Well, the federal government just committed millions to the housing initiative right in my backyard. And this isn't just another headline, it could be a game changer. Whether you're feeling squeezed by rising rents, hoping to buy your first home, or planning your next investment move, you need to understand exactly how this federal funding could help reshape our future. So stick around. First, let's clarify what this $7.2 million from the federal government means. Through the Housing Accelerator Fund, Dieppe, the city that's right next to Moncton, making up the Greater Moncton area, will fast-track the construction of 220 new affordable housing units within the next 3 years, with thousands more planned for the coming decade. These homes aim to help moderate-income families and individuals addressing our critical housing shortage. These homes will most likely be multifamily rental units offering 2 or 3 bedrooms in desirable areas of the city. Yes, that's prime real estate and potentially higher development costs. These dollars should help offset the costs and allow for median rents to be in line with the published CMHC data. While official CMHC stats say that vacancy rates are low, a quick look around Moncton shows something a little bit different. There are signs popping up and people around the water cooler talking about free month or half month off rent. This tells me that vacancy rates might be a little bit higher than reported if these discounts are being offered. Now, this could just be water cooler talk, and when I looked, there was only one building that I could find with a smaller than average floor plan that was offering a half month off rent. Now, without diving in too deep, it is February, we have had a lot of snow, and people generally don't like moving in the winter, so perhaps this was a two-tiered approach to get people to move and fill up the building a little bit quicker. As we head into spring, I'll loop back on this and dive a bit deeper. If vacancy rates are on the rise, know that higher vacancy rates typically mean downward pressure on rents, which is a great news for renters looking to manage their monthly costs, but that might mean that you actually have to move to a vacant unit to take advantage of that, meaning you're incurring the cost to move to get a lower rental price, and in the end, what are you actually saving? However, landlords, particularly smaller investors operating under New Brunswick's rent cap, may face challenges as their business becomes limited by stabilized rents and higher competition, and also rising property taxes. But it's not all negative. Increased investment and new developments usually bring better amenities, infrastructure, neighborhood appeal, and potentially increasing property values over the long term. Hello, appreciation. If you currently own rental properties, it's crucial to balance short-term cash flow management with long-term equity appreciation. But Cam, if you are heading down the road of potential oversupply of rentals, what about condominiums? That's a great question, and I'm getting there. But before we land the plane, I will touch on affordability. It continues to be the single largest barrier to home ownership in our region. Despite these new developments, many first-time home buyers are still facing steep entry costs with little to no choice of homes below $350,000. Now, I realize that the keyboard warriors might come out here telling me that $350K is cheap. For some, sure. But those entering the market or families on a single income, there isn't much out there unless you want to rent in Greater Moncton. Another recent announcement is the 100% rebate of the provincial portion on HST for eligible purpose-built residential projects, which started between November 15, 2024 and December 31st, 2027. This rebate could significantly lower development costs for residential properties, encouraging developers to add more affordable rental units to the market or potentially make more money or have cash on reserves. It might be too early to tell though. So if residential rental housing supply keeps increasing, it could ease housing prices indirectly, which could benefit aspiring homeowners by relieving market pressure. However, immediate affordability remains challenging without additional targeted incentives for first-time homebuyers and enough inventory to satisfy the need. With potential rental market saturation, developers might pivot towards condos, or at least that's what some of us are talking about at the local real estate investor meetups. We have seen it on PEI and in the HRM. Sure, the business model is a little bit different, but you might potentially be looking at the same business outcome long term when comparing purpose-built rentals to condominiums. If you want me to dive a bit deeper on this and make a full video, please leave a comment down below. My hot take is that condos offer a unique appeal to two key groups. First-time homebuyers looking for a financially accessible way onto the property ladder, and for homeowners looking to downsize, simplify life, and protect their equity. It's just my opinion that this dual demand could drive significant growth in the condo development, reshaping our housing landscape significantly. Every day I talk to people who are either trying to get started in real estate or looking to protect and simplify their investments. And yes, owning your property that you live in is an investment. This recent funding creates new opportunities and complexities in our market. Navigating this effectively requires clear information and strategic thinking. So here's your takeaway. This federal funding is accelerating new housing developments, influencing both rental and home ownership markets. Higher vacancies and rent caps mean short-term pressure for landlords, but stability for renters and a win for affordability. Condos could emerge as a strong alternative for both entry-level buyers and downsizing homeowners, reshaping market dynamics. The next few years will also prove to be interesting, and I'll be there to help with insights and information. If you found this video helpful, please hit that like button so others can see it. Thanks for watching, and I will see you in the next video.